What's up, guys? Quantum League Capital here, and today I'm going to be going over how I made $27,500 in 1 month with Ftmo, a prop firm company that will give you capital to trade. And the reason I'm going to be going over this is for a couple reasons. One, to show first off that these companies that give you money are legit. They will pay you out straight to your bank account, usually within a few business days, so there's no hassle. I'm not going to be showing you my bank statements, but I'm just telling you that it's real. Two is to kind of go into the strategy at the time, like what I was thinking. I didn't give it really all away here because I just didn't feel like I needed to or like wanted to go too in depth. It also wasn't like planned for me. I wasn't like reading off a script or anything. They told me that you can answer these questions however you want. You can prepare for them. They told me the questions, like, relatively what they were going to ask. And also, I'll go into the account over here, which this was released in December, but the month that they're going over was October to November, I believe. And this is the account for that month. As you can see, this is a $200,000 account. They gave me $200,000 to trade with, and there's many companies like this, guys. Like, I'm gonna make another video going over prop firms, which ones you should use, which ones you should probably stay away from. But Ftmo is definitely legit. I love Ftmo. They were the first prop firm I worked with. I have two accounts, two $200,000 accounts. One is actually in euros, and we go over that in this video as well. The euro account, though, made less money than this one. This account for this month made, I think it was like almost 20 grand. Yeah, so you can see right here, the profit was $19,315 just for this account. I was in a drawdown for my max daily loss, $6,000. My max loss ended up being $2,000 though. So basically what that means is, like, I had it down at 6,000, but it ended at 2,000, if that makes sense. We're going to get into the video, but I'm going to kind of skip around a lot of things. But yeah, the average profit for this account was $1,000 a trade, $1,000 a loss. My average risk to reward was 1-to-1. 35 trades for this month, 128 lots, and a 75% win rate. So it's pretty high. And here are some of the trades. October, I took 7 trades. October 21st, made 4 grand, almost 5 grand. $1,500, $1,100, $1,200, $300 loss, $1,100, $2,000, 24, lost 6, lost 800, made 9 grand, 1,300, 1,600, and then like a small little gain right there. But this is the main thing, and I go into it in the interview as well. Like I said, we're gonna skip around a lot because I'm not going to watch like the whole video. I'm kind of breaking most of it down right here, actually. But as you can see, like, the consistency in the lot sizes, and for those of you who don't know, lot sizes are basically how much money you're putting into the market on that trade. So, for instance, 3.6 lots. I'm taking, like, every time the price goes up a pip, if you know what a pip is, it's $36 per pip. And I'm risking $36 every pip that I lose as well. So let's say my my stop loss is 100 pips. So surprisingly, I'm pretty bad at math, but $36 times 100, that's a $3,600 loss, $3,600. That's almost 2% of a 200K account. Just to give you perspective on that. But yeah, so as you can see, the consistency 3.6, 3.6. Every now and then I up the risk a little bit. 7 lots here, 3.6, 3.6, 3.6, 3.6, 3.6, 3.6, 3.6. The consistency and the risk management are really what held it down. Um, and then as you can see, and we go over this in the interview, and this was something that I didn't even really pay attention to until we were talking about it, was the fact that they were like, "Wow, you really like to short things. Like you're a big seller." And I was like, "Yeah, I didn't even know that about myself." And as you can see, I made literally almost all the money from selling. I made 19,000 of it from selling, 18,900, and I made a measly $330 from buying. So, yeah. These are some of the stats. My biggest wins were on gold. After that was GBP USD. After that was GBP JPY. My biggest loser was on Euro JPY. 3.6 lots was my highest volume. As I said, I made most of the money trading 3.6 lots. And yeah. So, and as you can see, the profit split was fully processed and the payment was sent to you on 22nd November 2021. If you need to download your invoice, blah 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 blah. So, and this is the little chart too that shows. So this account was up, 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 up. We had it at 13,823, and then a big fat dip. We're down at 7,000, and then a big fat climb, and then up, up, up. So the key here was consistency. It was risk management. It was taking profits. There were economic factors that are kind of a little more difficult to get into. But yeah, without further ado, let's get into the interview a little bit. I'm going to put it on 1.25. And we're going to skip around a little bit because, like I said, this was off the cuff. So I wish I could do this interview over again because, there was a lot of times where I was saying, because it was just straight off of my brain. So it was really off the cuff. Nothing here was scripted. But yeah, you're gonna hear my full name. But let's get into it.
Hello traders, welcome to another trading interview, this time with one of our series Ftmo traders, Hunter from Houston in Texas. Welcome,
Shout out H-Town.
Hunter, and Merry Christmas to you and your family and to all Ftmo traders that are listening to us right now.
Thank you very much. Merry Christmas to you, and thank you for having me.
Well, thank you so much for having you on today, and thank you so much again for coming. And for those who are listening to us for the first time, Ftmo is a serious proprietary trading company that actively search for trading talents because we have developed a unique two-step evaluation process that consists of Ftmo challenge and verification phase. And once you pass this two-step evaluation process,
Okay, let's skip.
an extra trader because he currently has two Ftmo accounts, one with $200,000 account size and the second one with 160,000 euros account size. And he had a profit from previous period of more than $19,000, and on the second one he had more like 7,500 euros, which is around $27,500. Really great result. Merry Christmas again. And before I'm going to talk about the strategy, man, I would like to ask first question: why do you have two account size in different currencies, man?
So the reason that I did that was I actually had plans for the Euro account specifically because I wanted to start a company in Europe, and
Uh-huh.
I figured if once I had some money rolling and once I was able to save up that money, I wouldn't have to transfer it. I could just put that money in euros and transfer it to a bank account over there.
Cool.
So story behind that. That plan has now changed. The whole plan of having a company in Europe, and I was about to do it too, and I almost did it, was to set up a company in Cyprus so I could have someone who was basically helping me avoid taxes, which is not a good thing. But I was trying to figure out a way to lower it, not necessarily avoid it. Um, but yeah, that was the whole reasoning behind that, and yeah, I decided against it because it was kind of complicated, and also you have to have someone else running the company, which I didn't want to do. I don't like. I don't. Nobody else is gonna control my shit. So yeah, went against that. Now, just to put that out there, what I really want to do is I'm probably gonna be starting a company in Dubai. Um, so that's the plan, and yeah, I don't know if I like the whole point of this channel, because someone asked me recently to like, oh, are you like charging people to like teach them or blah blah blah. I don't think I'm gonna like, at least I don't have any plans to like charge anybody to teach anybody anything like that. This whole channel is just to educate, to teach people. Um, yeah, I'm not really concerned with like making money off of it. This is just something to help people learn. But anyway, back to the video. That
And
was the whole plan behind it.
and if I can ask, what company do you want to start in Europe?
A trading company, just trading my own personal money, and then eventually maybe taking investors and trading other people's money as well.
Cool, cool. So for how long do you trade?
Uh, I started trading in 2017, I believe. So it's been about 4 years.
Almost 5.
Yeah, yeah, almost five. So it's been a long journey.
And do you remember the starting phase?
Yeah, I remember one of my friends on social media was posting about it. It was actually one of my oldest brother's friends, and I saw he was making like good money, and I was like, "Hey man, can you like show me how to do this?" And he was like, "Yeah, but you have to pay me." So I ended up paying him some money. He showed me how to do some things, and within the first week of me trading, I put $1,000 into an account, and I actually doubled it.
Wow.
Um, so from there, I was like just fascinated because I was like, "Oh my god, I just turned like 1,000 into 2 grand in like a week." So, true story. Yeah, the first week that I actually put money into a live account, I doubled it in the first week. Um, and we'll get in more into the method specifically in this video, because, like I said, I didn't go into everything in this video. But yeah, it even back then, like when I think about it, it always comes down to consistency, taking your profits, and that's a big one because I think people just get so greedy, and that's something that like you have to just train out of your brain and your mind, that like you need to get every single drop as a trader, because you don't. Like small gains over time add up so much. Like you have no idea. Like my average profit was like $1,000, and that's really not that much on a 200K account. You can get $1,000 really quickly and really easily, and you could do it consistently every fucking day. So, and in between, you're gonna have losses, but you can keep your losses small, and those big wins over time, as you accumulate them and you get so many of them, those losses aren't going to really even put a dent in your overall gains. So, yeah, shout out to my friend Chris. He was the one that put me on to trading. It was at the very end of high school going into college, I believe, when I first like started dabbling with it, or like basically freshman year of my college year. But yeah.
How is that possible? Right?
Yeah, I was like I got to keep going with this, like see where it takes me.
And then
So,
and then tell me, how many accounts have you blown?
oh, so many. So many. So like right after that, so I did really good, and I was doing good for a couple weeks after, and then my friend introduced me to like forex factory, which is, if you don't
Yeah,
know,
yeah, yeah,
to the
sure.
people watching, it's just like a place where you can see the news events, and the red folders, they show you that there's going to be big volatility. So he showed me that, and he was like, yeah, if you trade before the news, like you can, there's a bunch of volatility, you can make a bunch of money. Well, I ended Look, he's smiling because he knows. He knows. Up getting really lucky. I turned like 2 grand into six. So I went from 2,000 to 6,000. And then I kept trying to like do that. But honestly, it was more like gambling. It was more just like me not really know what I'm doing and getting lucky. And I ended up losing all that money.
Mm, cool.
And so, yeah, another true story right there. So I went from a couple grand, started losing some money here and there, and then my friend told me like, hey man, like you can check out these news events and these red folders. They're high impact news. And actually we can pull it up right here, Forex Factory. So you see all these red folders, they tell you like the big news that's coming out that's going to have a big impact on the market. Well, he started showing me that, and he was like, yeah man, like you can trade the news and you can make a ton of money. So like I didn't even know. I just knew there were news events happening. I had no idea what the fucking news was about. I just knew like, oh, it's on this pair. I'm gonna trade one of these pairs, and then I'm gonna, you know, just get in and out of the trade. And so I went all the way up from like a couple grand to like 6 grand on my own personal account, and I felt like a fucking boss. Like it felt amazing. And at that moment, because for those of you who don't know, I dropped out of college and I was like, man, this is it. Like I'm gonna get out of college. Like, fuck it. And from that moment, I was just like, dude, I have so much money. Like it felt like so much money at the time, because really I'd never had that much money that I just made, especially that quickly. Like it literally was within like a week or two, I made that money. So that's really fast. And like even if you're starting a business, like you usually have expenses. Like this was like no overhead, nothing. It just came like that. And yeah, shortly after I kept trying to do the same thing over and over, and I lost almost all that money. Eventually it got down to a point where I was like, I didn't lose all the money actually, but I was just like, fuck it. Like I'm going to take my profits. I remember I like withdrew like money that it was still in there, kept it at 1,000, and then eventually that account did get blown, but I took a little bit of money from it, so at least it wasn't, a full loss. But yeah, great story, good times looking back, and I love looking back at stuff like that, like in the journey, to see like how far it's actually come.
That was my first big lesson in
Hmm.
forex.
And are you looking at Forex Factory right now from the fundamental point of view?
Oh,
Of
of
course.
course. The fundamentals for me are pretty big.
Mm-hmm.
Like today,
Yes, today.
FOMC is gonna be happening, and that's huge.
Mm-hmm.
So I always pay attention to the fundamentals. Typically, I don't really like to trade when there's a
Mm-hmm.
bunch of news, but sometimes I will. So it just
Yeah,
depends.
many unexpected events during those news can
Yeah.
happen, of course.
So the news is actually really important. um it's a slippery slope because there's a lot of manipulation in the market, and I think I briefly touch on it in this interview towards the end. But there is a lot of manipulation in the market, and there's a lot of people who say like, oh, the news is just for manipulation. You know, nobody really believes that this is like moving the market, but truth be told, there are fundamental factors that move the market whether you believe it or not, but there also is manipulation. There's both. So but yeah, things like interest rates, things like economies, how they're doing, GDP, manufacturing, inflation, all these things are factors that will impact currencies, they will impact commodities, they will impact indices, they will impact all of those things, and those are things you need to be aware of. It doesn't mean that you need to be like a fucking fundamental analyst. Um, I'm really deep into like economics and stuff like that, so I do pay attention and I know a lot of things that are going on. But I will say this: so if you want to make money in trading, you need to pay attention to these uh, key factors when it comes to fundamentals. You need to pay attention to inflation, like CPI, PPI, news events. Um, you need to pay attention to interest rates. Interest rates are so big, they will tell you the strength of a currency over a longer period of time. For example, the US dollar raising interest rates pretty aggressively over the past year now. That's the reason we've seen the US dollar be so strong. They've been raising it aggressively against almost all the other currencies, even though other currencies are raising. They started raising later, and they're raising not as aggressively. So that right there. GDP is pretty important. Um, FOMC, like we talked about in here, is usually when the Federal Reserve Committee like gets together and has like meetings on like what they are going to do for policy. So mainly interest rates and stuff like that. Um, and then what else? I think I already said GDP. Oh yeah, and then NFP, which is like non-farm payroll, which talks about basically I think kind of along the lines of employment, and that's another thing, unemployment rate, employment change. Those factors are really important. Is there anything else? And then anything else that you see as a red folder on Forex Factory. Like I said, you don't have to know all these things. You just have to pay attention to mainly the main thing I pay attention to is interest rates and CPI, PPI. But other than that, the rest of it, just pay attention to it, know when it's happening, know the time that it's happening. For instance, news happened yesterday at 7:30. This was on Thursday. Um and just know, like at the very least, if you're going to be a trader, know when news is happening.
And
Yeah.
can you tell me something more about the learning process?
Yeah. So, like I said, my friend was the one who showed me, and he was kind of teaching me, the basics like support and resistance, key levels, how to identify trends and stuff like that. And a lot of those things that I learned then, I still use now.
Mhm.
Um, but there was more and more that I learned as I progressed, and but I still try to stick to like the basics because I
Mhm.
think that once you master those, like you're on the right path.
Mhm.
So there are many different strategies and ways to trade. Like there's so many strategies nowadays, and what I can say is that because some people trade support and resistance, some people trade something called smart money concepts, and then there's like a subdivision of that called Wyckoff. Then you have people who trade fundamentals solely. You have people who trade order flow. You have people who trade uh, based off of volume and momentum. You have so many different ways to trade, and what I can tell you is that all strategies can work, and the only thing you need to do is find a strategy that works for you, that you feel comfortable with, that you feel like you can make work, and test it over time and just find consistency with it. If you do that, then you can have success in trading. All these people that come out with like people talk about like the holy grail in trading. There is no holy grail in trading. There is no one way or the fucking highway. There are so many different ways to trade, and you just have to find what works for you. Like for some people, day trading, right? And that's another thing you need to think about. Like, how long do I want to hold this trade? Am I patient enough to hold trades for multiple days? If you are, then great. Maybe swing trading's for you. Can you not hold a trade for more than a day? Are you impatient? Well, day trading or maybe scalping is for you. Personally, I'm not really a swing trader. I will hold trades maybe a couple days sometimes, but it's not typical. Most of the time, I have like swing trades in mind, but most of the time I end up taking profits like within a day or two. So I'm pretty much a day trader.
And what is the most important lesson that you gained during this period, this learning phase?
Uh, Through this whole entire period, I
Mhm.
think the most important thing that I learned was risk management.
Mhm.
And I think that's why so many people end up blowing accounts is
Mhm.
because they see other people and it's possible to like take a small amount of money and
Mhm.
turn it into something big, but
Mhm.
it's not very typical. You need to first be consistent, and once
Mhm.
you have that consistency,
Mhm.
um, and you figure out what your risk profile is, you're gonna have a lot of
Mhm.
success.
That was something what I wanted to ask you right away. Where do you see the connection between risk management and consistency?
Risk management. Now, this is a great topic to get into too, and that's what I was talking about with this account right here that we can go back to. Um, and as you can see, it's mine. My name right there, Hunter B. Hunter Ballin. Um, but yeah, it's the risk management, guys. Most of these trades, I was risking 0.5% most of the time, and that's why most of the losses are $1,000. Most of the time, I was risking $1,000 every time. I don't know why I'd be giving those trade ideas. Them things are trash. But yeah, fucking Windows 11. Um, Risking $1,000 almost every trade on most of these accounts, on funded accounts. If you're gonna take these challenges, I would recommend only risking 0.5% to 1%. Unless you're experienced and you've back tested your strategy and you're confident in it and you feel comfortable with taking that risk. But for the rules of most of these companies, you can't lose 5% or more in a day. And if you're risking 2% and you take one trade and lose it, you're already almost halfway there. And then 10% max loss, you take 5 trades, you're done. So yeah, you take 5 trades and you're done. So if you're confident you're not going to lose that many trades in a row, then fuck yeah, do it. Go for it. It's probably better for like short-term strategies if you're going to risk that much and you take your profits pretty quickly, like for a scalp or a day trade. But yeah, risk management is like one of the most important things.
Oh, it's huge because when you're just the first thing you should always know when you're planning your trades is like, what am I risking? And if your risk is all over the place and you're just kind of like, oh, this looks like a good trade, let me just put 5 lots on this
Hmm.
or 2 lots on this, but you're not like really paying attention. And I would say for people who are starting out, like a good amount of risk is like 0.5 to 1% risk per trade,
Hmm.
and
Yep.
that's what I like to stick to
Hmm.
as well.
For day
So
trading, right? Probably.
yeah, yeah,
Because
yeah,
swing traders can have high
yeah,
risk, bigger one.
yeah.
Yeah, see, and this is something he said, and it depends on, what you're comfortable with. And like I said, it depends on your strategy. If you've tested it out, it works better. Yeah, if you're a swing trader and you have like these big stop losses, then sure, you could probably have like a 2% stop loss or 3%, but I don't know. Even then, I wouldn't want to do it because it's like you're risking a lot on an account that is not giving you that much leeway to begin with. You're having a 5% max daily loss. If you risk 2%, you're already halfway there. So even if you're swing trading, unless you're experienced, you know what you're doing, and like I said, you are like confident with your strategy, I would not do it personally.
And the scalpers, the 1% can be really big.
Yeah,
Yeah, yeah.
scalpers.
So you are
Yeah,
intraday trader, right?
scalpers I agree with.
Intraday, and sometimes I'll hold trades multiple days, but I like to kind of get in and out for
Hmm.
the most part. Yeah.
Cool.
And when it comes to getting in and out of the market, this is something that you should think about too, is the more time you spend in the market, the more time is being risked. Your money is at risk. So if you see a trade going your way and something looks off and you're like, this doesn't look right, it's so much better to just get out and take your profit and go on to the next trade. There's always more trades, there's always more profits, there's always more opportunities. Just go on to the next trade, take your money, and be on about your day.
All right, I cannot wait to hear your strategy. Can you show me something, please?
Yeah, no problem. So here, let me. So basically, my strategy is some.
And this is very basic, and like I said, I didn't really go into it fully here. It's going to be very basic support and resistance. So, yeah, just keep that in mind.
I always start with something called top-down analysis.
Huh?
Um,
Oh, that
and
sucks.
that's basically starting from like the monthly down to the weekly down to the daily.
Of course.
Um,
Multiple time
and
frame
then
analysis.
I like to, yeah, yeah, and then I like to use the 4 hour and the 1 hour for my entries. I don't typically like to go any lower. I don't like 30-minute, 15-minute.
Mhm.
That's just my personal preference.
Mhm.
But really, I only usually look at the monthly, like at the month end.
I will say now that has kind of changed. Sometimes I like to go down to like 30-minute, sometimes a 15-minute, um, to get more precise entries. But it's occasionally. I still really like the 1 hour, the 4 hour. Those are the time frames that give you bigger confirmations. They mean more. A 15-minute, 30-minute candle, they don't mean as much. The higher time frame candles are way more important
And like same with the weekly.
to
But
bigger
every now and
trends at
then I'll take a
least.
look at it just to see like what is the trend.
Mhm.
So like for instance,
So
on an
yeah,
up
let's
2018 of May, it's just
yeah. So the first thing that you want to identify is the trend. Obviously, maybe I should go full screen on this at this point. Obviously, you can see all these blue candles. That means that they're going up. The red candles mean they're going down. This is a bullish trend. Bullish just means an uptrend. The price is moving up. This is gold. The first thing you want to identify is the major trend. Also, on the monthly, we can see that it's been pretty bearish for a little bit recently, from 2021 to or pretty much since the beginning of 2021 almost, it looks like. Um,
been
but
up,
yeah,
up, up. Um, we've been pulling back.
so let's skip around a little
So
bit.
long term, and that's another thing that I should say is part of my strategy is fundamentals, not just technical analysis.
Mhm.
Man,
Um,
I didn't even realize
so
my stuff was glitching
when it
out.
comes to certain things like the dollar, like that's another big part of my strategy is the dollar index. And
So dollar index is basically a chart that is the strength of the dollar against like a bunch of different currencies. It also correlates to gold. It just in general will tell you how strong the dollar will be. And yeah, so identifying the trend, realizing, kind of correlation between dollar index and dollar pairs. I traded like a basket of currencies most of the time on this account. And yeah, fundamental factors like, is the dollar strong? Is the dollar weak? Are we having lower interest rates? Are we having higher interest rates? Like, let's think about all this.
seeing how it's matching
And you kind of piece it all together.
up against all the other currencies. And especially with gold, I feel like the fundamentals are pretty big. You have to know what's happening with the
Mhm.
dollar. So paying attention to what the Federal Reserve is doing, printing money, what's their balance sheet, interest rates,
Mm.
all this craziness that they
Mhm.
do. And
So,
that's why in the long term, even though gold has been going down, I'm still long term bullish on gold. Um,
and do you use some correlation with the dollar index?
yeah. So it's interesting because gold I've noticed doesn't actually always correlate with the dollar index. Um, but for the most part, it will move in correlation with dollar index. I
Mhm.
like to trade a lot of dollar pairs, so I usually use it for mostly like the currency pairs, not necessarily gold. Um, but I do still try to like see if they're matching up and look at the technicals and the
Mhm.
fundamentals. Um, so that's kind of like the fundamental side.
Mhm.
Just to like give a brief explanation of that before we got into like the multi time frame
Mhm.
analysis, like you were saying.
Mhm.
But like we were looking at the monthly, like I said, long term bullish, and it's kind of been pulling back ever since about mid,
Okay, let me
just
skip through a little
like
bit.
right here.
So yeah, so basically we're getting into support and resistance now, and I'm just gonna explain it here because I can probably explain it better right here than I did in that interview. So a lot of the times resistance is just like, think of it like a ceiling. Like, you see how right here the price like barely broke through, but it immediately like rejected, and there's this big drop off. And also before over here, it used to be a support, and it was holding and holding, and every time it hit this floor, as we would call it, support, every time it hit this, it would reject and it price would push up. So those are usually strong levels, key levels, where price is going to react, whether support or resistance, or they were both. One time it was support, now it's turned resistance. And so these are levels that you want to pay attention to because price will often come back to them. They will retest them, and there will be some type of reaction. Now you want to pair that with like candlestick patterns. Is it being is there like exhaustion? Is there volume? Is there momentum? Like these type of things to help you decide like, okay, is price going to continue going up, or is it going to reject and fall back down? And those can be paired along with multi-time frame analysis. Let's look at the lower time frame. Are we in an uptrend? What is the structure looking like? Is there higher lows, higher highs? Are we breaking lows? Are we going to make lower highs and continue lower? So these type of things when it comes to technical analysis. Now pair that with your fundamental analysis and you say, okay, is dollar strong? Are they raising interest rates? Oh, they're raising interest rates. That means dollar strong. Okay, and it's lining up with the technicals. We got lower lows and lower highs. Okay, now it's hitting this resistance where this is a good place to sell at. Oh, here's where I'm going to place my stop. This is where I would get out the trade and say, okay, I'm wrong. Here's the place where I'll place my take profit and say this is where, trade is a success. And yeah, I pretty much briefly just went over everything that I went over in the technical side, I want to say. The only difference is trading a basket of currencies, which is like trading like USD CAD, GBP USD, trading all these USD pairs because they're USD and they're all going to typically move in a similar direction. And that was a part of my strategy at this time too.
This is a pretty
so we're going to skip over this part.
Stronger stuff. Indexes and like stocks start dropping. Indices, when they start dropping, a lot of money tends to flow into the dollar because people see it as a safe haven.
So this is another important part that I'm glad I kind of skipped around to. So indices, typically when indices are falling, a lot of the time you have to think about it. When indices are falling, what is happening? Well, for one, people are shorting that don't own it. Okay, so that's like, something to take into consideration. But also, too, a lot of people are selling stocks. So what happens when you sell stocks? Your money is going back into cash. And typically that cash is going to be the US dollar. The US dollar is seen as a safe haven because it's the world reserve currency. So when that happens, money flows into the dollar. Very important to know. There's a correlation there for sure.
So money starts going into the dollar, even though necessarily it might not be the safest thing, but it's like the safest thing at the time. Mm-hmm. How long that will last, I don't really know. Of course. But long term, I expect the dollar to lose a lot of value.
Mm-hmm. Well, you can explain more about the craziness that dollar has.
The craziness, I would say, I think it all started happening around the pandemic 2020 when they decided to print trillions and trillions of dollars. And they just flooded the system basically. And then along with that, they lowered the interest rates to 0%. And they basically have just created massive bubbles in a bunch of different sectors in the economy.
Correct.
And along with that, like I said, the big hot button issue that everyone's talking about now is inflation. And that's why you kind of have seen markets panicking a little bit because everybody's worried about the FOMC coming up, especially today, because they're like, oh, the interest rate hike, they could hike the interest rate, and people are starting to worry because they don't want that, because it can cause a lot of damage.
And the reason they don't want the interest rate hike, just to go, I don't know if I've explained it here, but just to break it down in case I don't, is because people are being loaned so much money, and they basically were getting it at a no charge, no interest. And when they have to start paying back their money and the interest rates climb, and then they're like, oh shit, the only reason we could afford this is because there was no interest. Now they're having to pay back their loan plus interest. When it keeps rising, there's just more and more and more money. And some of these people are taking out giant loans. Some of these companies and institutions are over leveraged as fuck. They're borrowing so much money that they can't handle an interest rate hike because they literally can't afford it. So when these interest rates start rising, companies will start going bankrupt. There's a lot of shit that starts happening. So yeah, that's just more in detail.
Because then people have to start paying money back. A lot of people are over leveraged, and it can cause problems. So that's just something you have to pay attention to, especially if you're trading dollar pairs. And most people trade dollar pairs because it's their major pairs. But personally, I think gold is probably one of my favorite pairs just because of the volatility.
Gold is such a
Moves a
great
lot.
pair. I still love
It
gold.
moves a lot, and when you get a good entry, like say up here at 1854, for instance, and this was like last month. If you would have got all the way up here,
Okay,
like
skip around a bit,
until
and you can go watch
most
this on their
important thing for
channel. It's a 30-minute video, but it's well worth the wait. But I'm trying to skip around because this is
make
it's a long video.
Nice. So what a nice fundamental analysis. Mostly. Thank you very much.
Everybody's ever talked about.
Wait, what?
You don't have to write it out to your full
Oh yeah, we should definitely listen to
for
this.
that long, and your trades don't have to hit the full take profit. As long as you're consistently right, you can get in and out of the markets and still make a lot of money. Because if you're trading, like for instance, one of my accounts is $200,000. If you make 1% on a trade, if you just do that 10 times, that's already 20 grand.
Exactly.
You know, you don't have to write it out to your full maximum take profit, because there's sometimes where the market's not always just going to be smooth and go straight to your take profit. So just keep that take that into account basically, and know always taking your profits is better than not taking profits at all.
Yep.
And potentially losing money,
Nice.
because that's what happens.
Nice fundamental.
That's what happens, bro. That's what happens. People literally will be in profit, and their trade will reverse on them, and they will take a full fucking loss to the face.
But after that drawdown, it was just
and this is
pretty big rise. I got all the way up to about 14,000. And then right here, I remember specifically what happened right here too. This big dip. This was when I traded gold, and that's why. Like I said, gold is a nice pair when it's working in your favor, but sometimes it's a little volatile. So I had risked a little bit more than 1%, I think, on this trade. It's pretty.
Yeah, we'll skip. I kind of went over this already.
A lot of risk on it, but I had about 7 lots. About 5.4.
Nice.
Like I said, I like to trade yen pairs, USD pairs. So GBP JPY, CAD JPY, GBP USD, NZD JPY.
JPY pairs and
you are pretty consistent with the volume that you are.
JPY and USD pairs are, without a doubt, I think the best pairs to trade. If you're gonna trade currencies, USD pairs, JPY pairs, without a doubt, trade those. Volatile, good volume. A lot of people trade them. Very liquid. Best currency pairs, in my opinion.
Are executing.
Yeah, I like to trade a lot of the same lot sizes most of the time. Every once in a while, like this, 7 lots.
Or 3.6. Why 3.6?
3.6 because most of the time it was just my every time I'd enter, that was what the risk came out to with $1,000. And then it just got to the point where, like, if it was a little bit over or under, I was like, whatever, 3.6. I just kept it consistent. Consistency. It's so important. That's one of the biggest things. If you want to make $27,000 in 1 month, consistency. Consistency with your trades, winning. Consistency with your volume, with your lot sizes. Consistency with your risk management. Consistency with your profit taking. And consistency with just trading your plan. 5 things right there that will make you consistent. Skip around a bit because I kind of went over this at the beginning. We were like, oh, yeah, you short a lot of stuff. And I was like, yeah. So, kind of going through it. That's pretty much it. I'll probably just end it right there because this video has probably been on for like 30, 40, almost 45 minutes, almost an hour now. But yeah, towards the end, he was just like, anything you want to say? And I was like, yeah, thank you to my mom and dad for supporting me and, everyone that believed in me. And he said, also, is there any advice you want to give to traders? I was like, don't give up, at the end of the day, if you really want this to happen, like, you'll find a way to make it happen. So, and that's my advice to anybody watching this or considering to get into trading. Sometimes it can be rough, sometimes there's a lot of downs, but just keep learning about yourself. Another thing that I would say is journal, which is something that I've gotten back into recently. I kind of stopped doing, but I'm doing again. And pay attention to yourself, regulate your emotions. Psychology is so big in trading. And just don't give up. If you don't give up, eventually you will get it. One of the biggest quotes that I like, or I think it was also a book, is that you could be like 3 feet away from gold. So just don't give up. You could be almost right there. You could almost be at your breakthrough, and you have no idea. So keep going, keep pushing, and do whatever it takes to make it happen. And I promise you, it will happen. So that's what I'll end this video with. That's what I'll leave this message with. If you want to watch the full video and just want to watch me talk to him, the channel's right here, Ftmo. I'm going to make another video soon about all the prop firms, which ones are legit, which ones you should check out. Obviously, Ftmo is great. So yeah, go check them out, and stay tuned for more videos. I'm going to try to post a video maybe every couple days. I'm not really sure. Just trying to figure out more content to put out for you guys, things that would help. Anything that you want to know or you want to see, let me know in the comments. If you've made it this far, give it a like, give me a subscribe, and thank you guys so much for watching. Peace.